To remain updated with the latest business news, click on the bell icon.
First things first, Sumit, I'll start off with you. How did this CoinDCX journey start? We'll come to all the details of the topic of discussion, of course, but I want to learn from you, how exactly did this idea germinate and how did you both go about setting it up? Tell us a little about that.
Sure, Saurabh. I think this was nothing less than a roller coaster ride, I will tell you. And just to give you some background, Neeraj and I, we have a 14-year-old history. Like, we know each other for almost 14 years now. And we did our graduation together from IIT Bombay. And after that, I went on to join Sony in their Tokyo headquarters. And that was the first time I heard the term Bitcoin, right? And Japan, of course, like, because people are more technologically savvy. And then I was very curious. Unfortunately, did not invest in Bitcoin that time, and did not even read about it. And then I sort of like ignored it. Then in year 2015, when I was planning to move back to India, I came here, I started reading about it, and like my mind just opened up. Okay, this is something which is revolutionary, and there are very few technologies, right, which are so fundamental and so futuristic. So I thought, okay, let me read about the space. I spent hours and hours reading about it, and then realized, okay, this is an area where I would want to make an impact. Neeraj and I, we joined hands together, and then we started talking to every individual. And then I realized that India is far, far behind with respect to the developments happening in this space, right? If you compare it with what's happening in outside India. And then we thought, okay, we have to make this change happen, right? And someone has to do it. Of course, there was a lot of confusion with respect to regulations, but we took the plunge. We thought, okay, we'll figure that out along the way. And very interestingly, the moment we were about to launch the platform, this RBI circular came. And then 99% of the people who wanted to do something in crypto, they sort of backed out. But because the conviction was so strong that we want to make this change happen, we want to create an impact at large scale, we continued to fight and then build. And here we are today, but very, very exciting journey. And we feel that with this technology, it can truly impact a lot of industries and add a lot of value to the nation. So we are looking forward to that time when India becomes a leader in this space globally.
It's an exciting journey, Sumit, but it's also a turbulent one. As you've seen, some of the policymakers are still not clear. The Reserve Bank of India has made its stand very clearly known about what that organization and that institution feels about crypto. Currency, of course, is not even a word to be discussed. It's crypto assets, or VDA, virtual digital assets. Now, we'll come to the topic of the day, of discussion right now. Crypto, is it an asset or a liability? Now, convince this audience. I feel that audience is pretty much convinced in many cases, but I would still like you to convince this audience of the benefits of crypto, the use cases first, before we come to the dangers and the problem areas.
Sure. What we have seen from the history is that, like, fundamentally, crypto and blockchain as a technology, right, has a lot of value to add to the nation, any nation which adopts to it. And that is the reason precisely why you'll see all the progressive nations like US, Japan, Singapore, and now Dubai is very aggressive in terms of setting itself as a crypto hub, and that is attracting a lot of capital, a lot of talent, and they have realized that it can add a lot of value to the nation. So that is there, right? Now, any technology that we have seen, of course, that comes with a lot of apprehensions, right? And because it is the change in status quo. And any country which has not adopted technology or which has shunned down technology has never yielded positive returns, right? So generally, whenever a technological shift is happening, it's important that we adopt it, we understand it, and then we take the positives of it and implement it in the economy. And whatever downside or negative nuances are there, you just cut it off by regulating it nicely, right? Now in crypto, there are various applications and use cases that are being developed globally, but a lot of that innovation is not happening in the country, right? I'm on an everyday basis, I'm seeing people talking about shifting to Dubai or Singapore or other countries. There's a massive level of brain drain that's happening because India does not have a positive regulatory framework. And a lot of these applications that will be built on top of crypto with the underlying blockchain technology, that is not happening in the country, right? Tomorrow, whatever applications, Web3 applications that will come, they are not being developed in India, and that is one of the risk and something that Indian government should definitely look at and understand it and regulate so that all of these applications and use cases happen in the country itself.
I'd like to add to that. I think what Sumit said makes sense because you see the evolution of information technology itself. Earlier, back in the days, it was, there were exchange operators, telecom exchange operators, and then people used to make a phone call to someone. It used to go via centralized exchange operators. And then it got evolved into today's internet, right? Which is much more decentralized, I would say. Today you can build any application on top of internet. And it's such a powerful economic driver today. From that stage, it has evolved into internet. And now, crypto and blockchain, from a user's perspective, I think are driving towards further decentralization. It's just a continuum, right, which is evolving. To give you one use case which we often discuss is the creator economy. People or entrepreneurs who create content and post it on the internet, they always go to some kind of middlemen, right? Be it Netflix, be it YouTube, or any other middlemen, and eventually they reach to their customers, right, via them. A lot of revenue is going to the middlemen, right? And we have seen a lot of times that creators, artists do not benefit all that they can. If middlemen are replaced by technology, right? I'm not saying replaced, but essentially if they're aided further, right, with technology, I think value gets created for creators as well as the consumers because they will have to pay less and the creators will earn more, right? I think that is one of the very important use case of...
No, but the middleman gets eliminated, right? You can't
not necessarily eliminated. If they can be the ones who build on crypto, right? They adopt crypto. Today, telecom operators are still there. They are providing the infrastructure of internet, right? But it's more efficient way of communication. Similarly, when NFTs, for example, which is again kind of a crypto, comes into the picture, the economy benefits. It becomes much more efficient, right? The creators benefit because of higher income, lesser income going to middlemen, right? That I think is a natural evolution. And consumers benefit because they provide, they get to pay less at the same time.
See, Sumit, I just wanted to, in the earlier sessions, we've discussed the difference between blockchain, or rather the distinction between blockchain and crypto. Nobody, including policymakers, the government, RBI, nobody has a problem with blockchain. The issue arises when there is the whole discussion around crypto. The currency part, as I said in the earlier session, also can be kept aside because that's not going to happen in India, as in many other countries. Let's talk about crypto as an asset class. Can tell us about why crypto as an asset class can actually add value and create, positive change?
Sure. So as you rightly mentioned, crypto as a currency is something that nobody wants and nobody is even asking for, right? I think there's one big confusion where people are saying, okay, crypto, because of the word currency, it's a legal tender, and that is basically what's creating a lot of confusion. When we talk about crypto as an asset class, right, that is when we start seeing a lot of value, right, being created, because one thing I think that I keep hearing is that, okay, blockchain is good, but crypto is not good. And that has to be very clear, both go hand in hand. Blockchain without crypto is pure database. That you can do today also. The beauty in blockchain, because it is decentralized and distributed across millions of nodes, you have various people participating in the network. And why would they participate if there is no incentive mechanism, if there is no consensus mechanism? Crypto builds that layer on top of blockchain technology where you are actually achieving a truly decentralized network where ecosystem is participating in that network and also have stake in that network, also are a critical part of that. Otherwise, it's just a database where one person having full control and you can just, there is no, extra benefit that it gets without this crypto layer. Now, various applications that are currently being built up or will built in the Web3 space, right? Essentially what's happening is, we all understand data is extremely important. Data is the new oil, right? Data is extremely, extremely important. Anyone who has access to data is essentially, can leverage that to get insights, and people can also misuse it. And people are very sensitive about how this data is being used. This data is currently being used by all of these centralized companies, right? What crypto as an asset class it does is it distributes that, and now you're a part of the network with crypto asset. For example, imagine a use case which Neeraj was highlighting, where you are uploading your content on YouTube and YouTube taking more than half of your commissions. Now, if there's a decentralized application or a Web3 application which is providing all of that infrastructure, right? The value is within the network, where every participant who has that asset is actually getting value out of that. And there is no middleman which can leverage your data, because if you are not paying anything, essentially you are essentially the product, right? You are paying from your data. And now with this, you are not compromising on your data. You are getting the value, and the entire network is in a win-win-win situation, right? And that is one of the application why crypto asset is important, because now you're a part of the network. If you remove crypto out of the picture, right, then essentially you are limited with very small applications, which is like, which is just like you can achieve with a distributed database. But when you start to build real world applications, you essentially need to have crypto angle, because that is what makes it beautiful. That is what makes it a lot more applicable, secured, transparent, and crypto provides that angle to blockchain. So both should go hand in hand.
No, so yeah, you're making a case for crypto as sort of a layer over blockchain, and which will be...
Just imagine you have Chrome browser, but there are no websites on Chrome. What will you do on Chrome, right? So you need blockchain, plus you need applications on top of blockchain, which are solving real world problems. And what drives this network is this crypto angle.
No, that's understood. The point I'm making is, while they solve real world problems, like you said, what are there are huge examples where cryptos have been misused. There is a cyber threat angle, there is a huge fraud angle, there is a money laundering angle, and we know about all the cases which have appeared over time in many of these cases. Now, as a somebody who runs a crypto exchange, and also I'll come to the volatility aspect after this. How do you look at the point of misuse of crypto, and how do you suggest that can be actually addressed? Because that's a serious concern, not only of the government but also in the public at large. Yeah, would you like to?
Yeah, I think you are right when you say that crypto has been used at various occasions for misused, right? But there are certain facts I'd like to highlight. In 2019, the volume of transactions going to illicit addresses in crypto industry was roughly 3.6% as per a reputed report in the industry. And today, in 2021, that number has come down drastically to 0.15%. And this has been happening because of proactive development of compliance-related tools, development of technology, so that transactions can be better traced, as well as blocked. For example, if a transaction is going to illicit addresses, it can be proactively blocked by exchanges today. That technology is already there. So overall, the trend is declining, right? I think every technology has its side effects always. Consider internet. We spend so much time, right? 4 or 5 hours on a lot of people spend 4 or 5 hours on internet, just on Instagram, for example, right? And we have seen reports people having some kind of mental disturbance also, right? It's a side effect, very small amount, right? But it's a side effect. Every technology has a side effect. People say about artificial intelligence, it might take over the world someday, right? It's a probable side effect. But it does not mean we don't adopt the technology. We should focus on the positive aspects and try to mitigate the negative aspects, right? Otherwise, you don't want to be South Korea, which did not adopt, North Korea, which did not adopt internet itself, right? It leads to devastating results. So, yeah.
One point I'd like to highlight is the beauty about blockchain, it's transparent. Everything that happens in blockchain, it can be traced, and it's all available on a public ledger, which is not available in the current fiat system. For example, if someone has physical cash, how do you trace it? right? Here, at least if someone is doing a transaction, it can be completely traced, monitored all the way from the genesis block till the way it went to any illicit use. And that is why the percentage of illicit activities in crypto has gone down drastically at the tune of 0.15% in the last year. If you check this percentage for the fiat economy, that's way higher than this number, right? Roughly, I think 2 to 3%. I think that. So just imagine the difference, right? This problem will not be there in the crypto world because of the property of a blockchain that it is transparent and traceable, which is not currently there in the fiat systems.
So the next issue, of course, which is a matter of concern, is the huge fluctuations one witnesses in terms of the trading on cryptocurrencies. I use the word currency loosely here again. For instance, we know how the volatility in the exchanges and the trading patterns have actually taken shape. Now, that is the other problem which regulators, when we speak to them, seem to really highlight. And you've seen some of the problems being highlighted in the earlier sessions as well. How does an exchange monitor that? And there is always a fear among government and policymakers that, smaller people who are lured by this whole lure of crypto as a new asset class, putting in their hard-earned money, can just be wiped out overnight and then be left with nothing. So that's a serious concern as well. How do you address that?
Totally agree with your point. Let me ask you this question. Which asset class is not volatile? All the asset classes are volatile. You talk about stock market also. We have seen shares which have gone down to even 98%. I personally have few stocks in the portfolio which are also very volatile and gone down drastically, right? So volatility is a part of every asset class. Now in crypto, it is higher. I understand because the market capitalization of crypto as an industry, right, is sub $2 trillion. Right? If you talk about a higher market cap, the volatility goes down because the asset classes of higher market capitalization. So, X billion dollars or X million dollars in that market cap will not have much higher impact, right? If the market capitalization is way higher. Now, as crypto gets more and more matured over time, first thing is for sure that this volatility will go down over time. Right? As you have more and more institutional investors coming in, which are investing it from a long-term potential, volatility will go down. So yes, volatility might be higher relative to other asset classes, but it is bound to go down as the asset class increases in size and gets more matured. Right? But volatility is a part of every asset class. Some are more volatile, some are less volatile. Now in terms of the second part, how do you protect the investor? Now this is something that we strongly believe in, that we would want our investors to be informed and protected with this volatility, right? So one important thing is that how do you ensure that you are listing the right tokens, right, on your platform? So that is where we have devised a 7M framework. So any token that gets listed on the platform goes to that framework, and only after it passes the 7 criteria gets listed on the exchange. This is how we ensure that there are roughly, I think Abha was mentioning 15,000 plus tokens, right? On the exchange you will have less than 100 tokens. And that is after due diligence done on each and every token. After that it gets listed. That is one level of protection. Second level is whenever we are listing any token, we also ensure that our investors are informed about what the use case is, right? What is the history of that project? And we build a lot of content on YouTube, on our blogs, on our website about what that project does so that investors are always informed. And we recommend people that you invest in crypto from a long-term perspective. Of course, some people want to speculate, but that speculation is there in equity markets also, right? Investing in crypto from a long-term potential is what we as a company would recommend people, right? And that is what we believe in. And that is the reason why we'll also see volatility going down over time in this asset class.
Neeraj, I want to ask you about the next part, which is the taxation element. Now, budget, we know what the budget has done. It has put a 30% tax, 1% TDS. Yesterday, there was another set of clarifications, which was, which the industry has expressed its concerns about in terms of mining as a capital expenditure. Now, how do you look at that in terms of the fact that, even before regulation, there are this host of taxes and restrictions which are there? Because the finance minister is very clear that there is nothing which prevents the government from taxing something before a law is formulated on that.
Yeah, I think taxation is, like apart from the taxation rates, taxation is good for the industry. In a way, it puts the industry in the records of the government somewhere, right? And also allows government bodies to get well-versed with the technology, with this new sector. So I think it's a very positive step by the government. But taking it a little further, I think the narrative in the industry should be has to be positive, right? How government talks about crypto and blockchain technology is very important, because from such discussions and such signals, people either get interested into the sector or they get scared, from the sector. So that's super important. And I believe, there was a discussion that the adoption of blockchain technology has been comparatively slower in India for the past 7 to 8 years. We have very few applications, built on top of blockchain. I think blockchain is a very fundamental technology, and it's a massive technology, as big as internet itself. And you need lakhs of people developing on it. That's when it gets developed and put to real use cases. You need a significant chunk of workforce, Indian workforce, working on this technology for a better tomorrow, right? And for that end, I think narrative is very important. How government sees blockchain and crypto, that's super important. And crypto is invariably tied with the blockchain. If you ban, discuss about crypto negatively, then people lose interest in the blockchain technology also. Blockchain was born with Bitcoin, right? The concept of blockchain was popularized by Bitcoin and by crypto. And that's why I think it has to be positively communicated to the masses, so that we can build this nascent industry. Yeah, that's very important.
Sumit, you're part of associations of crypto exchanges and crypto players. Are you engaging actively with the government? What's been your what's been the feedback so far?
So Saurabh, we have been communicating actively with respect to sharing our thoughts. Why the current tax provisions can kill the industry, and I'll tell you why. Right? So there are various provisions, right, which were highlighted in the bill, right, which, like example being 1% TDS. Now, if you look at the consequences of that, right, the moment people start paying 1% TDS on every trade they make, that's essentially blocking, after you make like 100 trades, that's blocking most of the capital, right? And that will not serve the purpose, right? And then it will create unnecessary accounting nightmare for the government, for the individuals, and that's not benefiting anyone, right? TDS is good. We believe every transaction should be tracked and every data should go to the government so that they can trace if people have filed their taxes currently. But just like this 1% TDS is going to have serious consequences, and it will dry down the trading activity, and ultimately who will suffer are the retail investors, because then they will have to pay X or 1% higher or X percentage higher for every crypto they purchase, right? So this is one example. Now, there are few clauses, and yesterday there was one like in terms of offsetting not allowed. Why would essentially these are tax provisions which are not good for the industry? And what will happen is when you have such onerous tax provisions, and when people read that, right, what essentially comes to their mind, okay, I will not, I will not invest in this, and people who are developing also, right, will say, okay, India is not progressive with respect to blockchain developments, and I cannot build a Web3 application. Let me shift my base and let me move to some other country where, countries like Dubai, Thailand, they are actually trying to make their country as a crypto hub by introducing favorable tax frameworks, right? And India on the other side, I think that is the difference. And how you look, what Neeraj was mentioning, how you look at this entire industry is something that needs to be thought through and discussed proactively. We are doing communication from our side with respect to sharing what the industry stake is. But I think same has to be mutual, and then that needs a deeper discussion. Every single point, right, that is coming on with respect to taxation, with respect to regulatory framework, that has to be thought through in consultation with the industry in depth, because the space is new and it requires deeper discussion so that we don't take any step which will be detrimental to the growth of the industry.
Are you fearing trading volumes drying down because of these repeated clarifications and taxation which is coming? And also, do you, there is also a view that the more you tax, the more you sort of have a negative narrative around it, it can just go underground and, become part of a dark web and become, in that sense, an invisible market which exists. 100%.
I think people are, people want to pay taxes, right? But the moment you have such onerous provisions on taxes, there are two things that can happen, right? One is all of this trading activity can shift to international exchanges, which is not good for the nation because then that would be difficult to trace, right? The second is it can also maybe shift to P2P platforms, which again is difficult. I think regulating the exchanges, regulating crypto platforms, right, and taking every data point, what every user is doing, right, I think that is a better transparent structure, right, which will benefit the country, which will benefit the government, the users, the industry as a whole, right? I think that is the right way to look at it. If, if the tax provisions are very high, I think that will lead to trading activity shifting outside, or, people or the development of the industry that will not happen in the country or might happen outside, which in the long term will not be beneficial, like in the, during the early stages of internet, right? When India did not have the right infrastructure, a lot of that, companies like Amazon, Google, they are not born out of India. But India has that potential. India is actually technology powerhouse. And if you create conducive regulatory framework, a lot of that development can actually happen from India, right? But what it needs is like positive provisions in terms of policy, how you create soft touch regulations, and that is actually very important because that will attract talent to work and do these innovations by being in the country, right? I think that is very important for the nation.
Neeraj, how does CBDC affect life for the crypto players? Does it have any impact? Or is crypto going to continue as an asset if there are regulations coming on board? What is your reaction to the CBDC framework?
CBDCs, I think it's a good move from the government, right? But it should be based on blockchain technology. It must be able to interact with cryptocurrencies, crypto assets. I think that's very important. You cannot make CBDCs isolated from the crypto assets world. That might not serve the purpose, right? We have seen evolution of we have heard metaverse, right? Metaverse and CBDCs should be able to interact with, say, metaverse, right? So it has to live up to the technology. Otherwise, it just slight value addition, but it does not bring that revolution that we want. I think that's very important, and that's why I believe it should be left to the people to build the technology, right? I believe I'm a staunch believer that private players, people ultimately develop far better solutions, right? Less government, more governance. Government should not be involved in developing the technologies itself. Might not lead to the best results. So even CBDCs or any other technologies related to blockchain should be left to people to develop, and crypto provides that kind of incentive mechanism for people to develop these technologies further.
Sumit, as the bill gets sort of firmed up, what are your expectations from the government? What is the bill likely to do for your industry?
Sourav, I think I've not seen the bill. Nobody, have seen what's there inside. I think it's like a mystery for everyone. But I hope that the government will come up with positive policies around this industry so that the industry continues to prosper. And of course, I mean, whatever apprehensions are there, there should be some safeguards to protect the interest of the end customers. But what's there, nobody knows. But I'm very excited and looking forward to what's there. And I hope, and I strongly believe the government would come up with positive, especially the kind of developments that we have seen in the last 12 months. The hope is there. Right, and we believe that the bill will bring in positive, news for the industry, and then we will continue to engage with the government and share the industry's viewpoints, so that India continues to lead and win this space globally.
So we've run out of time on this session, but if there are any questions, we can just take a couple of them quickly. Yes, please, the gentleman in the red. Please introduce yourself. Yeah.
So my name is Tether. Work for a tech company. I was really intrigued by your conversation about volatility, and that's a given with any asset class. My question is kind of related. It pertains to the actual valuation. How do I know Bitcoin, for instance, should be worth money? Is it the right price to buy or sell? Is 6,000 too less, or is 80,000 too high? How do I know this? As opposed to any other asset class, there is some means
Sure, let me take this up. One interesting fact I'd like to highlight, just like how we value traditional assets, right? Shares being traded in stock markets, right? There is a quarterly financial that we get. Very few people know that you can actually get similar set of information in the world of crypto, right? Assets. For example, if you look at Ethereum, there was one Excel file, a person has done the analysis on what is the ARR, annual run rate for Ethereum as a platform, and that was coming out to around 13 to 16 billion dollars for that. And if you multiply that by 12, you'll get how much that platform is making. So you can you actually have these equivalents, and you can have models on valuing it, right, for Ethereum as a platform, because that platform itself is having revenues. And you can see, okay, if this is the revenue that they're making, and this is the growth rate that it continues with, what is the right price for Ethereum? And that, of course, right now is not that popular in the crypto world, because the tools, like stock is a very old industry, right? All of these tools and, processes are there, and, it's accessible to common man. But in the world of crypto, it's there. It's just that it's not accessible to masses, and that's something that we as a company are also planning to fulfill. That how can we make sure that people who are investing or are a part of this industry, they get full information about that particular asset. Just like you have PE ratio in stock, how can you calculate this in crypto? It's there. It's just that needs to be communicated in the right manner.
See, this is the exact concern, Sumit, because if you, just like the gentleman pointed out, you have a clear understanding of what a company stock is worth, right? Because of various valuation metrics which are applied. You don't have something openly. Like you said, it's there, but it's not out. So there's a lot of work left for the crypto industry to do as well in terms of making such information available to the public.
As long as we are aligned, this is useful. I think what happens in outside India, you have a lot of these tools available because people create a venture out of it. Like, for example, 4 friends join hands together and build the solution for the nation, right? Someone needs to build that for the country, right? Leverage the information that is available on the blockchain, understand that, make it, simplify it, like simplifying the complexity of crypto and put it out there for the masses so that they can consume that information and then they can make better investment decisions, right? For example, in Bitcoin, you can always have an analogy. For example, if Bitcoin is a store of value, and if you're comparing it with digital gold, what is the market capitalization of gold? 11, 12 trillion dollars. If Bitcoin comes to that level, you can do a simple calculation that what Bitcoin will be worth if Bitcoin reaches at the same scale as gold today, roughly $550,000, $600,000. So you can draw these analogies and actually price these assets.
Anybody else? Yes, please. Last question.
Yeah, good evening. I am Dharam Raj from CyberSec Consulting Services. In fact, whenever any technology or anything is not understood, always there is opposition. I think it's duty of the crypto fraternity to make it understood by government and other agencies. And not only that, that technology need to be understood. Apart from that, you need to provide the solutions or how it can be monitored, how it can be traced, how audit trail can be done. In fact, once it is understood properly, apart from the controlling the crypto, that is another aspect, but the understanding and monitoring, if it comes to probably that the things will be much better, that is a job of the industry need to do it.
100% aligned with that, and there are various tools and processes we have deployed on the platform. For example, on-chain transaction monitoring tools. It's there. So you deploy it on the exchange, and every transaction that is happening on the platform and interacting with the blockchain, well, you can trace every transaction and see, evaluate if it is coming from the right address or not. So a lot of these technologies are available, which are also deployed on platforms and which has been communicated to the government. Okay, this is how we deploy these tools and technologies so that wrong activity does not happen on the platform. So it is there. Industry is adopting it. It's just that it needs to be, and we are doing that communication. I think the root cause, if you do the root cause analysis of that, is like proactive stakeholder discussion. Right now, it cannot be one way, right? Like you have to have efforts from both the sides and then work together, start from scratch and then lay out the right regulatory framework which will benefit and will eliminate the wrong actors out of that equation, right? I think that is what is needed. We are definitely trying our level best so that we provide with whatever information we can, right, to give comfort to the regulators. And we believe that in the coming times, like earlier stakeholder discussions were not happening that frequently, but we believe that in the coming times this can happen more frequently, and we are able to give more comfort to the regulators, and then we create a positive sort of regulatory framework, right, which will eliminate the bad uses of crypto, and whatever good uses are there, we can adopt that in the current structure.
Sumit and Neeraj, thank you very much for speaking to us, and let's hope some of these regulatory confusion and the whole confusion around crypto as an asset class is sorted out soon in the interest of the exchanges and players, as well as in the general public, which have invested in large numbers. Thank you very much. Thank you.
If you like the video, do like, comment, share and subscribe.